Now we just want to turn to China because China came out with some surprising numbers, and we want to look at, what was really driving some of the import-export data. What does it mean going forward? Is it something that's a one-off? And then we're going to go a bit more depth on the oil side in the OPEC show as we start to look at demand. But first, we want to look at what happened with the U.S. renminbi, yuan backdrop as we start to look at USD versus CNY. So the Chinese banks extended about 1.9 trillion yuan new loans in September versus an expected 1.75. So we have additional stimulus coming to the market, which again isn't surprising to see. And then China's M2 money supply grew 10.9% year over year in September. Expectation was for 10.4, so kind of right in line. And the bigger issue is going to be how do they continue to kind of keep the CNY depressed against the dollar? Now, if you remember back in the end of 2015, I think this is a good chart that really kind of highlights where things were. There was a reserve requirement of 20% for forwards that was imposed in between 2015 2016. And then that has been used as a means of controlling the exchange rate. So it got pulled off, then reserve requirement for forwards was suspended, then it got put back in. And here, as the CNY rallied against the dollar, you see the reserve requirement for forwards was cut to zero again, with the idea that you were going to get more pressure to the downside, kind of keep that exchange rate depressed, because if you consider about the exchange rate, that helps exports. When your currency is cheaper, it means that people can buy more with less actual dollars. So I can buy more with a USD to CNY level of 7 versus 6.5. So there are always means to do that, and that's where we're going to continue to see some of this pressure. Now, the issue has been they've had a lot of debt come in because now they're being added to some key indexes, which has created some buying as people look to create a weighting against that index, which is, again, because when you do that, you have to purchase a yuan in order to buy those bonds. So again, that's putting that upward momentum, which they're trying to offset. And we think that there's going to be not so much a continued upward move, but you're going to continue to see that spread remain between the US dollar and the CNY. Now, when we start to look at the trade balance, it's important to appreciate what the backdrop is, because this is looking at trade, exports, imports, trade balances. And you can see we're really kind of level. So even though it seems shocking and it seems like there was a huge surge, and we'll get into what caused that increase, you're starting to see things kind of get back towards that normalized level with the trade balance, sitting right where it was in 18, 19. So again, we had that big disconnect where we had a big increase in exports, a fairly underwhelming import. Now we're seeing a strong export again and a big surge in imports. And again, the imports are going to be specific as to what they are and what they will be going forward as we start to see some of those exports, level off, as now that we've talked about with supply chains now caught up, things starting to normalize, WTO seeing that, the same thing that we're seeing in terms of just those headwinds in shipping. And that's going to impact China the most, especially with, countries, that now there's news that Macron is going to put a curfew in France. Again, these are things that are just going to weigh on total demand when we start to look at the aggregate of developed countries. What does the activity levels look like? And here is where we start to look at the imports surging. So what drove the imports? What drove that big increase year over year? And it was really integrated circuits reach a record level in absolute terms. And you saw the same thing with microchips. And you have to consider, well, why? Why did we get these semi-finished products? And it's because of Huawei. There's a significant amount of pressure that's coming in where there's either an uncertainty on potential tariffs, on restrictions of usage of Huawei products, or being in the Huawei supply chain. So what do? They stockpile. So we see a lot of stockpiling that's happening, not only at Huawei itself, but also in any place that is its supply chain throughout China as they look to assemble the different electronic products that they create. And this is why we saw this big increase, especially as we have Germany coming out saying that they're going to either restrict or suspend or do something against Huawei. And they were really kind of that last one standing, which again is creating kind of that uncertainty in terms of what's happening. So what do? You stockpile. We saw that with the US-China trade war, where US companies looked to stockpile before those tariffs hit. We continue to see those issues. Which is again showed a nice little increase in those import levels. Now, on the bright side, at the same time, you're starting to see the restrictions. They keep getting delayed. They keep getting pushed out. So even though you get the stockpiling, the question is, when we start getting closer to the election, specifically in the U.S., are we going to see a pivot, or are we going to start to see this start to ratchet up? And this is that preparation ahead of that. We also did have an increase in imports of oil, things that were in floating storage now onshore. We did get an increase of refined product exports. But again, the other thing that we saw, which we're going to talk about in a second, is grains. So when we start to look at China's monthly soybean imports, we continue to see it did not follow its normal trend. Now, if you look from 2014 through 2019, you typically have a drop off in imports, and we do not see that. Instead, we have an increase, which is going to remain through December, just based on the new purchases that we've seen, which essentially take us straight through Q1 of 2021 of China buying soybeans, not only from the US, but also Brazil. And this is very important when we start to consider what are the imports implications. We have electronics, and now we have a significant amount of grains. And this is something that has been going to continue to increase over time. And when we look at the cumulative and try to just straighten out in terms of, well, what does this look like? This is where you can see the imports continue to rise, and the slope is starting to shift higher. And we've talked about the Clean Your Plate campaign. We've talked about all the issues in terms of food security within China. So this isn't surprising, and it's going to be a big driver that's going to remain on the import level. Another key factor of the import level, before we start getting into some of the other pieces, there was a huge amount of bottlenecks at the ports, and some of those bottlenecks have now been alleviated, at least the ones that are under China's control, which has also helped streamline and pull some of the stuff that was sitting offshore through the system, which again, we had that backlog. So which is why we don't think these imports are going to be a huge surge, where they're going to remain elevated just based on what we're seeing on some of the refiners trying to buy some crude, trying to optimize storage. But at the same time, we have a huge amount of grains, which is going to keep things elevated. And we also have Huawei and some of these other individuals that could fall under sanctions starting to build up inventory, which again is going to keep imports elevated through the next few weeks. Now, it's important to look at, well, what are the surveys saying versus what is actually happening? So when we look at manufacturing PMI, imports, a lot of things that would kind of predicate a big increase in imports, you typically see that big surge, and you can see how it really outstripped what the expectations are. Now, gravity's real. It'll come down. It's just important to appreciate that there's a certain amount of things that can never really be truly predicted, and it's really that issue in terms of sanctions, tariffs, where guys are going to want to get ahead of that, and that's what we saw. And then the grains is obviously going to be a big component, which is why we will see some of that blue line, that manufacturing PMI, some of that continue to shift a little bit higher. But again, those two are gonna meet. It's just those imports are gonna fall further to kind of come back and meet that closer to that 0%. Now, the bigger issue, and it's something that we've talked about in the past, is rare earths, because we continue to see the metal exports are dropping further, and you see that yearly change in the exports dropping off, and it's really that unknown. If we start to see an increase in back and forth with India, with China, with China, US, this is kind of that dark horse where they could say, oh, well, if you want to do that, we're just going to cut you off from rare earths, and then that would be a big shock to the market. And you can see that in the U.S., obviously, no one's sitting still. We're stockpiling because we're seeing that preparation where, the exports are decreasing. We're trying to get it from other areas, but there's also obviously the demand factor. There's just less demand for rare earths. So it's not surprising to see that move lower. It's just important to see the trend. The trend remains where China's looking to stockpile more. They're looking to start to pressure some of the other countries that may be purchasing. Australia and China are in their own tit for tat. The biggest one now was with coal, with China restricting Australian coal, trying to pull more from Mongolia, which again is going to be its own interesting conundrum, which we'll talk about next week as we start to see iron ore and some of these other impacts in terms of what is going to happen with just Chinese trade, which is going to be a key factor. And now, before we sign off, one of the things that we want to touch on is what's happening in Turkey right now in terms of foreign reserves. And the reason why we're going to finish off with this is because when we look at, what is happening with China, Russia, what is happening with China and just the way some of these proxy battles are being fought, this is a key component in terms of where those foreign reserves are going. And when we talked about at the very beginning how Turkey had to raise rates, and this is what we're starting to see with those foreign currencies, excluding country swaps, foreign reserves continue to drift lower, which comes down to, how much support can they give Azerbaijan? We saw some footage of an Azerbaijan drone striking a ballistic missile site in Armenia. So we continue to see this escalation, especially after Armenia hit a key city within Azerbaijan. So it's just how aggressive is China going to get in some of their other issues now that we have India, China having a new meeting. And again, you have the Himalayas, it's already negative 10 degrees Fahrenheit. So it's not like you want to do anything. And here you have, is Russia and Turkey really going to want to increase their issues or their support in this area, given the fact that both countries are struggling with foreign reserves? So these are key areas where, especially when you start talking about oil, you can't talk about oil and oil exports without appreciating what is the country balance sheet, what is their FX reserve situation. Are they going to bleed volume into the market because they have to bring in dollars, even if they don't have price? And these are things that we're going to cover in our OPEC show, which is coming out shortly in terms of, what is supply, what is demand, what does it mean going forward. Then we're going to have our EIA show, which we're always happy to bring and dive deeper in not only oil, but also refined products. And then we obviously are going to wrap up with our favorite, the Primary Vision Frac Spread Count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.